Today, we are witnessing a significant turning point in the Ripple and XRP Saga 1 that has caused a wave of concern and honestly a fair bit of confusion among investors. And the broader crypto community, the SEC has reportedly issued an emergency order that temporarily halts Ripple's on demand liquidity, or ODL, transactions. This is a serious move that could potentially disrupt Ripple's core business of facilitating fast cross-border payments using XRP. The leaked court documents confirm that this is not just a rumor or speculation, but a formal legal step taken by the SEC in an attempt to clamp down on Ripple's operations. The ODL product has been instrumental in differentiating Ripple from many other crypto projects offering real utility to financial institutions. So the question on everyone's mind is, what does this emergency order mean for XRP's future and the broader adoption of Ripple technology? To answer this, we need to understand the broader context of the ongoing Ripple versus SEC legal battle and the implications of this recent escalation. Music following the news of the SEC's emergency order, the reaction from Ripple's banking partners was swift and definitely cautious. One of the most high-profile responses came from Santander, a key player within Ripple, and one of the most prominent banks adopting Ripple solutions. Santander officially announced through a verified tweet that it would pause all XRP-based transactions on Ripple, pending further clarity from regulators and the courts. This pause is telling and really highlights the inherent risk banks perceive in associating with a crypto asset under intense regulatory scrutiny. The announcement reverberated across social media platforms and financial news outlets, amplifying the sense of unease among XRP holders and traders. When a bank like Santander, which commands respect in global finance, pulls back, it sends a strong message about the gravity of the situation. This move could potentially cause other institutions to reconsider their engagement with Ripple, leading to a broader slowdown in institutional adoption of XRP. As news spread, the crypto markets reacted sharply with on-chain data, revealing a massive sell-off by whale investors. Approximately 300 million XRP tokens were dumped on Binance, one of the world's largest cryptocurrency exchanges, shortly after the SEC's emergency order became public. This sale was significant enough to cause a noticeable dip in XRP's price and stoked fears of a potential crash among retail investors. The timing and size of this transaction suggests that some of the largest XRP holders, possibly institutional players or insiders, are looking to reduce their exposure in anticipation of further legal challenges or regulatory actions. Large sell-offs like this often trigger panic selling in the broader market, further exacerbating price declines. However, it's important to remember that whale movements can sometimes be strategic rather than purely panic-driven. In this case, the scale of the dump is unprecedented and has analysts scrambling to understand the deeper implications amidst the turmoil. Some analysts and long-term holders are urging calm, pointing to technical indicators that suggest this could be an opportune moment to buy XRP. One such indicator gaining attention is the TD sequential buy signal, which is actually a pretty popular technical analysis tool used to identify potential bottoms and trend reversals. According to these technical readings, XRP's recent price drop may have pushed it into an oversold territory, signaling that a rebound could be imminent. Historically, XRP has shown resilience in bouncing back after regulatory scares, and this instance could be no different. These analysts argue that market overreactions often create ideal entry points for savvy investors who understand the fundamental value of Ripple's technology and its growing network of partners. The logic is that while regulatory uncertainty creates short-term volatility, the underlying utility of XRP as a bridge currency and cross-border payments remains strong, laying the foundation for future growth once legal issues are resolved. Given the current landscape, many XRP holders and traders are understandably concerned about how to protect their investments during this period of heightened regulatory pressure and market volatility. Experts recommend a cautious but strategic approach to managing XRP holdings. One of the most prudent steps is to move XRP off centralized exchanges and into non-custodial wallets, where investors have full control over their tokens. This reduces the risk of assets being frozen or impacted by exchange-related regulatory enforcement. Additionally, diversifying into stable coins or other less volatile crypto assets might provide a buffer against sudden market swings. For those looking to remain exposed to XRP, some suggest exploring decentralized exchanges and platforms that are less susceptible to regulatory shutdowns. Staying informed about Ongoing legal developments and market signals is also crucial. The ability to quickly adapt to news and market changes can be the difference between protecting gains and suffering losses in this volatile environment. Looking at the bigger picture, it's clear that the SEC's emergency order is part of a broader crackdown on the cryptocurrency industry, with Ripple unfortunately in the spotlight due to its unique position as a bridge between traditional finance and blockchain technology. The legal battle between Ripple and the SEC has already lasted several years, with both sides presenting strong arguments and counterarguments regarding whether XRP should be classified as a security. The SEC's latest move seems aimed at cutting off Ripple's operational capabilities to pressure the company into settling or complying with stricter regulations. However, it also risks alienating the banks and financial institutions that Ripple has spent years cultivating as partners. The future of Ripplet and XRP adoption hinges not just on legal outcomes, but on the ability of Ripple to maintain trust and confidence among its users. Despite the immediate negative headlines, many in the crypto community remain optimistic about XRP's long-term potential. Ripple's technology is considered one of the most advanced and scalable solutions for cross-border payments, and its network continues to expand globally. Several financial institutions are reportedly still committed to working with Ripple, believing in the underlying value proposition, despite regulatory hurdles. In fact, the current turmoil may serve as a catalyst for further innovation and strategic partnerships as Ripple looks to reinforce its market position and prove the legitimacy of its business model. Additionally, the XRP ledger's technical strengths, such as its fast transaction speeds, low fees, and decentralized validator network, continue to distinguish it from competitors and maintain developer interest. Moreover, the SEC's aggressive stance might inadvertently accelerate the adoption of XRP by forcing regulatory clarity and encouraging other jurisdictions to embrace more crypto-friendly policies. Countries around the world are watching the United States case closely, and some have already moved to establish clearer frameworks for digital assets. Ripple's global footprint means it's not solely dependent on United States regulatory approval to succeed. In fact, expanding partnerships and use cases outside the United States could offset some of the negative impacts of domestic legal challenges. The crypto market is highly dynamic, and shifts in regulation often create opportunities as well as risks for investors. Understanding this balance and keeping an eye on international developments will be key in navigating XRP's path forward. In summary, the SEC's emergency order halting Ripple's ODL transactions marks a serious chapter in an already complex and protracted legal saga. The immediate effects have included major banking partners like Santander pausing operations, a significant wall-riven XRP sell-off, and heightened market volatility. However, technical analysis and the fundamental strength of Ripple's technology suggests that this crisis could present a buying opportunity rather than a signal of doom. Investors are advised to adopt cautious strategies, including securing assets in private wallets and diversifying holdings, while staying closely attuned to ongoing legal and regulatory updates. Ripple's ability to weather this storm will depend on its legal defense, its continued partnership growth, and the resilience of the XRP ecosystem as a whole. As always, we will monitor this evolving situation and bring you timely updates to help you make informed decisions. Thank you for watching, and please share your thoughts below. Are you holding, selling, or buying XRP during this emergency? Your insights help shape the conversation. This video is for educational and informational purposes only. It is not financial advice. Please do your own research and consult with a financial advisor before making any investment decisions.